Welcome to Market Snapshot from the InCred Equities desk. In this podcast, our expert from the equities research team helps you navigate the stock markets with a quick roundup on the previous day's closing, along with relevant insights. Whether you are an experienced investor or starting out, this podcast will equip you to take informed decisions.
Good morning, everyone. Nifty has been going in line with expectations. We have been talking about that one should play for a bounce. So from 23,900, we aimed for a 400-point bounce, 500-point bounce. That was seen happening. It was more than that. It surprised me as well that from 23,900 we went towards 24,500 in a Ziffy. At high levels, we have seen again corrections sort of coming in. We are back to around 24,100. The key support now lies around 24,000, which is witnessing a decent amount of option writing, especially put side. And that basically means people do not expect this level to be broken on a relatively shorter basis. On the other hand, this also makes this a very important play. If Nifty were to trade below 23,980, 970 again, put writers will be forced to cover the positions, which can put tremendous pressure on Nifty, and we may step towards 23,500, 550 in a short period of time. Overall, the structure remains weak, and this is something we have been talking about. We may again see a bounce back. We may head towards 24,700, but till the time we don't close above that, I think one should not be playing for a bigger targets. Do not try to find tops or bottoms in the markets, especially in the current times. Do not pick bottoms. Play with levels. Stocks have seen a good correction. Many of the stocks, whether we talk about Nifty, other large cap stocks, or we talk about the broader market, we have seen good correction coming in. That may not see further correction. We may see some more correction. I'm not saying that they have found bottom as such, but we may see less amount of correction over there. So this is the time one should start building the portfolio. Keep some dry powder if there's a correction sort of coming in. Another say 10% on broader market. The individual stocks which are looking good, they may see another 5% correction. It will make even more interesting proposition to buy those names. So in my opinion, this is not the time to worry. There's going to be some time correction as well. We have seen price correction. We'll see some more price correction followed by time correction. There will be frustration levels which will be spiked. But then this is the journey in the markets. It never moves in a single direction in entirety. And this is good. A lot of stocks which are run up will see cooling of the momentum indicators. Valuations will also match up, and things will become more stronger, I would say, for a major upside. Apart from that, if you talk about the broader market, we have seen those again reversing. We have not seen previous lows being broken. So again, interesting to see. We have seen almost 10% correction from top. And that is not very significant in index which has moved 200%, 300% in a matter of 1.5 years. So some normalization is yet to be seen over there. I've been saying that dollar index is going to be a very big challenge. It's comfortably trading, selling above 105 levels. If this sustains, it is heading towards 108 to 110, which can create some panic sort of situation. US markets have seen a lot of spike on back of Donald Trump winning the elections. Now that event is over. We will now see normalization, profit booking over there as well. If you look at S&P 500, we are seeing a rising wedge pattern being formed over there. Interesting to see whether it's going to see a breakout or we'll see a correction. Ideally, in such scenarios where momentum indicators are at one of the highest levels, it will be surprising if there's a breakout of this wedge pattern. On the other hand, we may see correction sort of coming in. So things are moving in the right direction. Some amount of correction in US markets has to be seen. The way we have seen in Indian markets, a very sharp rise followed by correction. FIs sold 3,400 crores worth in cash on Friday. Domestic bought around 1,700 crores worth in cash. So the selling by FIs is going unabated. Gift Nifty is, however, pointing towards a flat start. It was down 70 points earlier. So it's a good thing. Asian markets are in red. Hang Seng is down 2.5%. Other Asian markets, other Asian indices are down anywhere between 0.5%. They are not significantly down. only Hang Seng is weakest of the lot. So even if we have a flourish kind of opening, we'll have to see if 24,200 sustains. We'll see some short covering. If it's not giving any hourly close or 15-minute close also about 24,200, then we may see some more slippages. It might not be a very painful day, but then it will be a challenging day for sure. That will be from our side. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.